Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. Well, an epic collapse is coming, and it will be big. I'm not exaggerating when I say that. Hopefully, if you're skeptical about that, at the end of this video, you'll come to the same conclusion, I believe. First, before we get into that, I want to say a thank you to all of you who prayed for our family over the past couple of weeks. In case you haven't seen the videos or the messages that went out, our daughter Elizabeth was in the hospital dealing with pneumonia and RSV and asthma issues, a whole host of problems that led to 2 ER visits and a hospital admission over Christmas Eve, Christmas Day. But I believe in no small part and in large part, thanks to the prayers of many of you, she had a full recovery. She's doing great now. We're all healthy, God willing, right? God willing for the moment. We're all healthy and doing great. So thank you for your prayers. I just don't have the ability to respond individually to every single one of you, but know that we've seen your comments. And we are so thankful for your prayers and your words of encouragement. So that said, hopefully we can kick off, God willing, 2025 now, back to a normal schedule of getting this out. I'd hope to get videos out on Monday. Turns out I could get one out here on Saturday. So, and on Wednesday, we'll be having a prophecy roundtable. That's Wednesday live at 7 p.m. Eastern Standard Time. So me, John Haller, Pastor Tom Hughes, Patrick Wood, Scott Townsend will be on that, talking about a whole range of subjects, mostly technocracy, transhumanism, AI related, technology related. This will be, I believe, the 6th one we've done. We started these last year and did 5 of these, and people seem to enjoy this very much. So if you had the ability to go over, this is on YouTube. You can click on the live tab on the channel and hit the notification button so it'll notify you of that. Again, if you're available live at 7 p.m. Eastern Standard Time on Wednesday, you can join the live chat as that's going on. If not, it will be recorded and up to watch anytime that you want thereafter. So, an epic collapse is coming, and it's going to be big. What am I talking about? Well, there's a number of issues globally we've talked about, but for this, I'm specifically going to talk about U.S. investment markets, the stock market, but not wholly the stock market, as we're going to look at in a minute, but speculative investments. Speculation has reached a peak we have never seen before. And back on December 7th, I believe it was, we had a Substack premium subscriber video that went out talking about this hasn't happened since 1929. And we went over all of the parallels between the lead up to the epic collapse we saw at the beginning of the Great Depression and what we are seeing now. We are seeing more of that now. The extremes are, again, unprecedented, even when compared to 1929. So let's take a look at this right here. So this is called the Buffett indicator. It's the market capitalization. What is the value of the U.S. stock market as a whole? If you bought all the stocks in the U.S. stock market and compared them to gross domestic product, or the total output of the U.S. economy, that ratio should be about 60%. As you can see right now, it's well over 200, which is unprecedented. I believe they calculated this somewhere around 180-ish in 1929. This chart only goes back to 1970. But you can see this is the peak of the dot-com bubble at 138%. This is right before the great financial crisis. And then this was prior to the correction, it turns out, that took place back in a couple of years ago, 2021, when it hit a peak. Now we're going to whole new extreme levels. Now, I don't know when this is going to burst, when this will fall apart. Could it be this year? It could be. I don't know with 100%, but I can tell you this. Whenever we see these conditions in the past, the conditions we're going to look at today, 100% of the time, it has ended in tears. It has ended with a crash. And so take that for what you will. Maybe this time is different. Again, it doesn't mean that this can't go on into 2026. I don't know. But I wouldn't I wouldn't bet on it. You're playing with fire. As people like to say, you're picking up nickels in front of the steamroller. Yeah, it may be profitable for a little bit longer, but what if you stumble? Right? You're going to get run over by the steamroller. Those are the conditions we see today in the market. Let's take a look at this right here. So this is S&P 500 price to sales ratio. So this is a ratio that helps evaluate companies. And as we can see, they only have data on this chart going back about 30 years. But we see in the lead up to the dot-com, it was 2.11. We saw it got to this level of 3.01 now. This goes through September at 2.97. It's 3.06 right now. So the highest on record. That isn't reflected on this chart because the chart that did was a shorter duration. I wanted to show a little bit more history here, but we are at a peak that has never been reached before. And that is very significant, as we'll talk about in a moment, because let's take a look at this right here. So this is from Investopedia. Has just a list of the top stocks in the S&P 500. And I want to come down and look at what those top stocks are. So we've got Apple at number 1. And keep in mind when we look at this how top heavy the market is. So when we talk about the S&P 500, a lot of people think, oh, well, that means I'm buying a share. If I buy the S&P 500, I'm buying a share in all 500 companies, but they aren't equally weighted. You're overweighted 7.41% toward Apple. So these top 7 stocks right here equal almost a third of the entire value of the index, even though those 7 stocks are just a little bit more than 1% of the companies in the index. So notice we're getting away from the biblical principle of diversification. What would we expect to happen as a result of that? Well, bad things when you ignore what the Bible says. But guys, when we look at these top companies, I went and looked up what are the price to sales ratios of these individual companies. Right now, Apple is 10. And we'll talk about why that's significant as soon as we go through this list. But it's 10. So remember, the market as a whole is 3.06, and it's unprecedented. It's never been higher. Microsoft is at 12. Nvidia is 30. A price to sales ratio of 30. Now, Amazon seems to be the most reasonable of these. It's 3.7. Again, higher than the market as a whole, but not 30 or 10 or 12. And we've got Meta or Facebook at 10. Tesla is 13. Broadcom is 21. Then we get in here, we're still overvalued. I think Google was around 7. Berkshire Hathaway was more reasonable, 2 or something like that. But I want to focus on the speculation of these top 7 stocks and how top heavy that is. Because again, it's a third of the whole index. And out of those 7 stocks, 6 of them have a price to sales ratio over 10. Why does that matter? Well, it matters, I think, because I have a long memory. I remember these things. I remember the dot-com mania and how that ended for the particular NASDAQ stocks and the tech stocks at that time. And it made me think about what's talked about here in this Felder report by Jesse Felder from several years ago. He was mentioning this. But he says, my friend Eric recently shared an iconic quote from the dot-com mania that is especially relevant to the equity market today. And again, he's writing this back in 2017. Multiply that many-fold over right now. He says, Scott McNealy was the CEO of Sun Microsystems, one of the darlings of that bubble. At its peak, his stock hit valuation of 10 times revenues or 10 times sales. What we were just looking at, right? So Sun Microsystems hit that valuation, that price to sales ratio of 10 that we just talked about. 6 of the top 7 stocks comprising over a third of the S&P 500 right now are over 10. Some of them even higher. NVIDIA at 30. I'm going to pause to let that sink in. Let's see what that means. It says a couple years afterward, he had this to say about that time. Quote, at 10 times revenues, to give you a 10-year payback, I have to pay you 100% of revenues for 10 straight years in dividends. That assumes I can get that by my shareholders. That assumes I have zero cost of goods sold, which is very hard for a computer company, and I would add, or any company. I don't know of any company that has zero cost of goods sold. Zero. That assumes zero expenses, which is really hard with 39,000 employees. That assumes I pay no taxes, which is very hard. And that assumes you pay no taxes on your dividends, which is kind of illegal. And that assumes with zero research and development for the next 10 years, I can maintain the current revenue run rate. Now, having done that, would any of you like to buy my stock for $64? Do you realize how ridiculous those base assumptions are? You don't need any transparency. You don't need footnotes. What were you thinking? So this is what he's saying to the people that bought Sun Microsystems at a price to sales ratio of 10. It says below is a chart of Sun Microsystems from 1996 to 2006. It started at around $5, ran up to 64 that Scott mentions, and then right back to 5. You would think this might serve as a cautionary tale for investors today. And I would say, obviously, it has not, because this is the price chart of Sun Microsystems. You see how it went up in this bubble and collapsed on the other end? But it's more than just a price chart of Sun Microsystems. It's a price chart of a profitable company, a normal company, a company that continues to operate, but that sold at a price to sales ratio of 10. And as we just mentioned, 6 of the top 7 companies, comprising a third of the value of the S&P 500, are trading at that level right now. And NVIDIA, which I think previously we talked about is, I think like 1/7 of the US economy or something like that in valuation. It's at a ridiculous valuation, is trading at 30 times price to sales. This is how that's going to end. We have history on our side. The only question is, where are we on this chart? Are we right here, here, here? Where are we? But again, we just saw how in 2021, there was a peak, then it went down. Now we've exceeded that. So I guess we're somewhere around here for the market as a whole, and we're headed toward something more akin to this plunge on the other side. Not convinced? Let's take a look at this right here. This is a tweet from the Kobo letter. It says, shocking stat of the day, the top 10 stocks in the S&P 500 are now almost 800 times larger than the 75th percentile stock. Not even the Great Depression in the 1930s saw market concentration this high. It's now 50% more concentrated than 2001. And this chart visually tells us all we need to know. Here was the 1929 bubble. Here we saw other bubbles in the past from the 50s, the Nifty 50 back in the 60s, the Nifty 50 back in the 1970s, the dot-com bubble right before the great financial crisis. And here we are now at unprecedented levels of concentration. This will not end well. As I said, the markets have gotten away from the biblical principle of diversification we read about in Ecclesiastes chapter 11. And you're not buying 500 individual stocks equally weighted. They are top heavy toward these extremes with just a handful of companies that right now are extremely overvalued. So history tells us the US stock market right now is in a bubble, and that bubble, when it bursts, will plunge on the downside. Not in a day. It's going to take a year or two as that unfolds, but you could have some extreme days on that side. Now, still not convinced and think, oh, Britt, this time it's different, right? It's different than all the other times in history. Let's take a look at some other speculative bubbles that are taking place. That's why I mentioned it wasn't just the stock market in the US, but US financial markets. This is called Dogecoin. So, 1.7% today. Dogecoin is worth $56 billion with a B, right? $56 billion. Now, what is Dogecoin? Well, it's a cryptocurrency. Let's take a look at this from Wikipedia. It'll give us a little bit of background on Dogecoin and what it is. It says Dogecoin is a cryptocurrency created by software engineers Billy Marcus and Jackson Palmer, who decided to create a payment system as a joke, making fun of the wild speculation in cryptocurrencies at the time. It's considered both the first meme coin and more specifically the first dog coin, meaning other such coins have followed, as we'll look at in a moment. Despite its satirical nature, some think it's a legitimate investment prospect. So this was created 11 years ago as a joke. And today, it's worth $56 billion. This will not end well, guys. Just letting you know that. It's not going to end well, all right? And the people who think they're investing in Dogecoin but are really speculating, they're gambling in Dogecoin, expecting it to go higher and higher and higher and higher, eventually they're going to be sadly disappointed. There might be a few people that cash out at the top, but the overwhelming majority are going to lose a lot of their life savings pouring it into joke meme coins. It's a joke meme coin. Now, you might think, well, Britt, this is just one example, okay? This is an extreme example, no big deal. People aren't plowing cash into joke meme coins and on the verge of losing their life savings. Well, let's take a look at the latest joke meme coin, which I never thought I'd be talking about, but this is called Fcoin. And Fcoin, while it's down 7.1% today, is still worth $1.4 billion with a B. Again, a joke meme coin called Fcoin that people are investing real cash into. Their real hard-earned savings into this. Why? Because it has great value to the world? No, it's because of speculation. It's gambling. They're gambling, much as we saw in the lead up to the 1929 crash and the lead up to the dot-com crash, where you had anything with dot-com in it, people would buy it up. Oh, it's going higher, it's going higher, it's going higher. And then it does not end well. We have This right here, back on December 16th, somebody on Twitter wrote, they will write books about this one day. It has Fcoin valued at 840 million. Again, this was back on December 16th. Junior silver miners, 990 million. Senior silver miners, so this is all the publicly traded senior silver mining companies, $1.3 billion. We now know Fcoin exceeds that. Fcoin is trading at $1.4 billion. So these, quote, investors have valued Fcoin more than the leading mining companies of silver, which, let's put this in perspective. If Fcoin disappeared tomorrow, would anybody other than the people who have put their money into this notice? And the answer is no. If silver miners disappeared tomorrow, the world as we know it would come to a screeching halt, because silver is essential for modern life. We can't operate cell phones or computers, or almost anything electronic is impossible without silver. So here they say, this person's writing, they will write books about this one day. Just Dario said 100%. That is true. They will write books like this one right here, The Great Crash, which we've referenced before. If you read this book, you're going to see parallels to today with things like this, where we have joke coins that are created out of thin air selling for billions of dollars. This is, and again, the individual coins are not $1 billion, but collectively, all the Fcoins, if you added them up right now, sell for $1.4 billion. And if you added up all the Dogecoins together, they equal $53 billion. What does this remind me of? Well, not just the crash of 29, but about this. Tulip bulb mania. I'm sure most of you know about this, but in case you don't, it says tulip mania was a period during the Dutch Golden Age when contract prices for some bulbs of the recently introduced and fashionable tulip reached extraordinarily high levels. The major acceleration started in 1634 and then dramatically collapsed in February 1637. It's generally considered to have been the first recorded speculative bubble or asset bubble in history. At the peak of tulip mania in February 1637, some single tulip bulb sold for more than 10 times the annual income of a skilled artisan. So I want you to think about that today. Think of a skilled artisan of today. Think of a skilled plumber, an electrician, and 10 times their annual income for a single tulip bulb that you can probably go buy for, 50 cents at the local gardening store. That's how out of hand that mania got. Is it any different today when we see what is happening around us? The answer is no. The problem is, oftentimes when they're in it, most people cannot see this. And then in hindsight, all the people that write about this say, oh, it was so obvious. But many of those same people today are cheering this on, saying, oh, it's going to continue on forever. Let's look at this right here. So this is another post on Twitter someone had. It said, describe this chart in one word. Total market cap, so meaning the total value of these stock markets. So here we have the United States in green. We have developed market Europe. So I guess this is all the European. I don't know who they're including in that, which countries they're including in that. China and Hong Kong, Japan, India, and some of these individual countries in Europe, UK, France, Germany, Spain, Italy, that are, I'm sure, part of this. But look at this, all of the world's stock markets compared to the United States right now. And he says, describe this chart in one word. Dario says 1929. And I say, exactly, 100%. Things are extreme overvaluations, as we just looked at, with price to sales ratios that are impossible. Even for companies that are in a high growth stage, but some of these the companies that they're talking about now, Apple, Microsoft, these are mature late stage companies. These aren't new companies that are growing 100% a year. They're already well-established companies. These valuations are at extremes we have not seen since 1929. We even had a few days ago, it was in reference to the debt ceiling, but President-elect Trump actually talked about 1929, and we're set up for another crash, another Great Depression. He understands and knows that this is baked into the cake. He doesn't want it to get blamed on him politically. So other people see this, know that it is coming. How about this from Ed Dowd? He points to this headline. It says, world economy has exited the boom and bust cycle, BlackRock says. And he says the Dow peaked on December 4th. This article came out December 5th. Will this be this cycle's Irving Fisher comment? If you know, you know. We won't know for sure until several months pass. So what is he talking about? Irving Fisher comment. Well, he's talking about this quote right here. This is from, I believe, Yale economist Irving Fisher back in 1929. He stated this 2 weeks before Black Tuesday. It says, stocks have reached what looks like a permanently high plateau. As Ed Dowd says, is this comment we just saw from BlackRock the equivalent of this? Are we in it? Well, we won't know for sure until several months pass, but it very well could be. That's what we saw then. We don't know when this is going to crash, but guys, it will. As I said before, I don't know the timing of all of this, but I do know whenever we look through history and we see these patterns, we see this data emerge, 100% of the time, it looks like, well, let's go back and find that chart. It looks like this, right? So on the way up, all these people are saying it's going to go up forever. Stocks have reached a permanently high plateau. The business cycle is over. Everything's great and wonderful. And every single time we hear that said, it ends like this. And that is where we're headed. So why do I bring this up? Why do I continue to focus on these economic issues? Because this is directly relevant to Bible prophecy, guys. As we mentioned back in this article, back in August, how the current global financial crisis leads to biblical tyranny in 10 steps. This is going to lead to the greatest financial calamity in the history of the world, bigger than the Great Depression. As we'll talk about in, God willing, videos to come, this involves more than just a stock market crash or a commercial real estate crash or residential crash, all of which are happening or are on their way to happening. But it involves a currency crisis. It involves a sovereign debt crisis as countries, entire nations collapse under the weight of the debt that they've piled up. And this will lead to a deflationary spiral worse than the Great Depression. Eventually, it will lead to bank holidays and the rollout of a new system that includes central bank digital currency, tokenized assets, and digital IDs. They've already told us this is what they want to do, what they're planning to do. They've been telling us they're running all these pilot programs to put the system out there. Why are they doing that? Because they know we're at the end of this system. The current system is soon to collapse. That needs to be replaced with a new system that entrenches the power of those who are in power now. And this is the system they've decided on. Central bank digital currencies, tokenized assets, digital IDs. Why does that matter? Because those three technologies, when implemented, are indistinguishable from the mark of the beast in terms of function and capability. They aren't the mark of the beast themselves, but they create a system where the government will have insight into every financial transaction that occurs. And not just insight and surveillance of those transactions, but the ability to control those financial transactions, the ability to cut them off, to redirect them, to place limits on them. And that gives the government complete and utter control over every aspect of your life once that system is implemented. How do they get people to take that? Well, they get people to take that because people are desperate when they can't afford food, when they can't afford rent, when they can't make the mortgage payment, when the entire economy collapses and the world seems to be coming to an end. Someone comes along and says, here is the solution. This will restore your fortunes. Well, what's the downside? Well, there's no downside. I mean, yeah, you'll have to give up your privacy and you'll have to enter this new system and we'll control every aspect of your life. They won't sell it as that at first, but people will clamor for this. This is coming. The Bible foretold this almost 2,000 years ago in the book of Revelation, Revelation chapter 13, verses 16 through 17. We read about the mark of the beast system, and what that system is able to do is indistinguishable from what this system is able to do. And guys, prior to our generation, this type of system was impossible. Technologically, it was unfeasible. It was impossible. We are seeing it happen right here in our day and time. Jesus said, when you begin to see these things take place, know that I am near, right at the door. Guys, Jesus is coming back. So that's where your hope needs to be, not in the things of this world, not in stock markets, not in Apple, Nvidia, Tesla, Dogecoin, or even Fcoin. If some of you have decided that that's an investment, it's not an investment. It's going to let a lot of people down. This will end in tears for a lot of people. But if you know Jesus Christ, if you built your life upon the rock that is Jesus Christ, the storms that are coming, they will not impact you the way they will impact the rest of the world. So make sure your life is built upon Jesus Christ. So let me know what you think. Maybe you think I'm wrong, right? Maybe you think, Britt, Fcoin is revolutionary. It's going to transform the world. It's far more important than silver, right? So, but the world 5 years from now will not be able to function without Fcoin. If that's what you think, leave your comments below. All comments are welcome, except those that are disparaging and attacking to other people or spammy. But if you have a different opinion, your opinion is welcome here. So leave your comments below. Let me know what you think. Make sure to hit the like, share, subscribe, and restack buttons. And God willing, I will see you on Monday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to visit my Substack at brittgillette.substack.com. There you'll find my latest videos and articles, as well as notes, where I share the latest news headlines, the articles I'm reading, and the videos I'm watching. Subscribe for free, and each new post on Substack will be sent directly to your email. Just scroll to the bottom of the homepage and hit the subscribe button. As an added bonus, your first welcome email will include a link to a copy of my free ebook, 7 Signs of the End Times. Also, make sure to check out all of my books. Just look up Britt Gillette on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.